This is William Hong Ho Real Estate. Today is Monday, May 4th, 2026. This morning, the Greater Vancouver Real Estate Market Trend Report for April 2026 was just published, and I have prepared an analysis of it to share with you today. The weather has already turned to almost early summer and it's gotten really nice, but the real estate market still seems to be in the depths of a harsh winter. I wonder when we might finally wake up from this cold spell and see the real estate market stretch and come back to life. With that hope in mind, I'd like to share what I prepared for today. Let's get started right away. First, this is a snapshot of the market in April 2026. As I always mention, let's look at the new listings first. In April 2026 alone, there were about 6,684 new listings. Last month, in the March report, the number was 5,792. I mentioned that there were 92 new listings, so the number has increased a bit compared to that, but it's not particularly significant. It's natural for the number to go up a little because of the seasonal activity. To find real meaning, you should compare it to the same month last year, April 2025. Compared to then, the number has decreased by about 2.4%. Just looking at this, there has been a bit of improvement. And because the problem right now is that there's too much inventory on the market, so a 2.4% decrease does show some improvement. But what's more important is that compared to the 10-year average, it's still 15.5% higher. Compared to the average of 5,787 listings, there are currently 6,684 on the market, so the number of new listings is quite a bit higher than the 10-year average. So this isn't really good news. If you look at the total active listings, that is the total number of active listings on the market as of the end of April 2020, it's 16,236. In last month's report, which was the March report, I mentioned 14,774. So this is the same, and considering things like seasonal trends and such, a slight increase is understandable. This figure itself isn't very significant. Compared to the same month last year, it's only a 0.2% increase, so that's fine. It's not a big jump. And the real issue is when you compare it to the 10-year average. That's what you should pay much more attention to. Compared to the 10-year average, it's a whopping 37.9%, almost 38% higher. That's the key point. I've been saying the same thing at this exact point for 3 or 4 consecutive months now. The problem is that there is just too much inventory on the market right now. There are too many listings out there. That's the biggest current phenomenon and the main issue holding back the real estate market. If you look at total sales, 2,110 homes were sold in April. In last month's report, I mentioned 2,032 homes, and the month before that, it was 1,648. So that's February and March. So if you look at each month individually, the trend is that sales are increasing. This is the same as before. Considering seasonal trends, more homes are sold in February than in January, more in March than in February, and more in April than in March. So the increase in sales volume each month is understandable. In that sense, this is actually pretty good news. However, what's important is that compared to the same month last year, performance is down by about 2.5%. More importantly, compared to the 10-year average, sales are still about 23% lower. About 2,735 homes should have been sold, but only 2,100 were sold in April, so the performance is weak. So when we look at these two specific factors, the fact that the overall inventory levels are currently sitting far too high, and within that data, the notably sluggish pace of sales, these two elements combined are, in my professional opinion, the primary reasons creating this rather gloomy and uncertain atmosphere across the Greater Vancouver real estate market as of the year 2026. Next, if you take a closer look at the sales to active listings ratio, it currently stands at exactly 13.5%. In last month's detailed report, I mentioned that it was 14.6%, and that was specifically in the March report. So, as you can clearly see from these figures, the situation has unfortunately worsened recently. Previously, I had noted it was 12.6% back in the February report. From the period of January through to March, the SL ratio actually kept showing signs of improvement, but in the month of April, it began to deteriorate once again. I will explain this particular part in much more detail later on, but while detached homes generally perform quite well, townhomes were unfortunately a bit sluggish in terms of their total sales volume. Because of the significant underperformance of the townhome sector, the overall average for the entire market fell to 13.5%. I'll go into more detail about this in the following section. Next, if you look at sales by property type, the main categories are detached homes, townhouses, and apartments, condos. As I mentioned, detached homes saw an increase in sales from 578 to 659 units. This is comparing April 2025 with April 2022, looking at year-over-year figures. Compared to a year ago, sales increased by as much as 14%, from 578 to 659 units. That's quite significant. I mentioned the same thing last month as well. Last month, detached homes also sold very well. So last month, I mentioned that this was an 8.3% increase for detached homes. So for 2 consecutive months, detached homes have been performing well. On the other hand, townhomes went from 442 to 433, and apartments from 1,130 to 1,009 both have decreased. Compared to last year, they dropped by 2% and 10.7%, respectively. Sales performance. Especially for apartments, a 10.7% drop compared to the same month last year is quite bad. So, as I keep mentioning, in some months, townhomes don't sell well. In some months, townhomes sell better, and it keeps rotating like this, so the types of homes that sell well change depending on the type. I haven't been able to get a complete overall insight into this yet, but just looking at the results and the facts, detached houses have been performing well for 2 consecutive months, really standing out on their own. On the other hand, townhomes and especially apartments and condos are performing very poorly. That's what I can tell you. Now let me talk about prices. As I always mention, we don't look at the average price or the median price, but rather the benchmark home price developed by the association. If you look in April, detached houses were at 1.8 million, townhomes were about 1 million, and apartments and condos were recorded at around $700,000. Last month, the specific figures that I mentioned in our discussion were $1,854,000, $1,047,000, and $760,000. These are the exact numbers I shared with you in the March report. As you can clearly see from the data presented here, they are almost exactly the same. There really isn't a significant or noticeable difference between them. So you can see for yourself that there isn't much of a price difference at all when comparing the month of March to the month of April. Also, if you take the time to compare these figures to the same month from last year, single-family detached houses are down by about 8.3%, townhomes have seen a decrease of 5%, and residential apartments and condos are down by approximately 8% compared to 1 year ago. I also specifically mentioned in last month's detailed report that those figures were 8.2% and 9.7% respectively. It's a minus 7.8%, it's down. This is what I mentioned in the March report. Whether it's 8.2% or 8.3%, 5.7% or 5.1%, 7.8% or 7.9%, there's not much difference. So the implication I can share with these numbers is that prices have been moving sideways for the past few months. As I mentioned earlier, the supply keeps increasing. Compared to the 10-year average, the volume is pouring in at 30% or 40% higher. Meanwhile, sales performance is almost 20% lower, meaning it's sluggish and things aren't selling well. Yet despite this, prices are neither rising further nor falling further. They're just continuing to move sideways and remain stagnant. This means that sellers are holding out quite well. It's precisely because of this that buyers seem to be staying on the sidelines and waiting. People think prices should fall further, but since they aren't dropping much, I cautiously predict that this is why the wait-and-see attitude continues. In this tug-of-war between buyers and sellers, it seems that neither side has given in yet, mainly because the sellers are holding out so well. Next, if you look at the sales to active listings ratio, as I mentioned earlier, overall, compared to last month, it dropped from 14.2% to 13.5%, which is about a 0.7% decrease. But as I said, detached houses have held up relatively well. It's almost the same as before. Last month it was 11%, and in April it's 11.3%, so it's pretty much unchanged, but the problem is with townhomes. From 17.2% to 15%, that's a significant drop of 2.2%. For apartment condos, it went from 15.7% to 14.7%, a 1% decrease. So, with these two sectors declining, the overall average has gone down. As I always explain, whenever I present the report, the association views the market as being below 12% or above 20%. If the sales to list ratio drops below 12%, it's considered a buyer's market with downward pressure on prices. If it goes above 20%, it's a seller's market with upward pressure on prices. The range in between is seen as a balanced market. That's the association's perspective, but I've always said I look at it as 15% and 25%. The upper range is the association's view, and the lower range is my own perspective, as I've mentioned before. As I've always said, the association's view fits well for detached houses, but for townhomes and apartments, I personally think the 15% to 25% range is a better fit. Anyway, according to the association's perspective, since the overall rate is 13.5%, it's considered a balanced market. But since it's below 15%, I see it as a step into a buyer's market. For townhomes, since it's at 15%, it looks like they're just entering the early stage of a balanced market. For apartment condos at 14.7%, I still see it as a buyer's market. To sum up everything I've mentioned so far, the insight for the April market trend is, as I said, that the gap between the detached house sector and the multifamily housing sector, in other words, between townhomes and condos, apartment condos, is continuing to widen. To put it another way, detached houses continue to see an increase in sales just like last month, while the multifamily housing sector continues to experience a decline in sales. So these two sectors are diverging, but if I were to offer a note of cautious optimism, it's that the detached house segment is ultimately playing the role of a driving force in the market and serving as a leading indicator of sentiment. As we move into the spring peak season, I cautiously hope that the multifamily housing sector will also pick up this momentum and soon rise together. This is not only my perspective, but also that of Andrew, the chief economist at the Real Estate Association. Next, regarding interest rates, I brought a comparison chart of the base rate, prime rate, and variable mortgage rates. As I mentioned, the base rate started at 0.25% in 2021 and peaked at 5% in 2023. After that, it came down, and as of 2026, it is maintaining a rate of 2.25%. Now, if you add the spread, the prime rate spread, which is about 2.2%, to this you get the variable mortgage rate. That's why the variable mortgage rate peaked at about 6.95% in 2023 and is currently holding at around 4.45%. But as for the interest rates, it doesn't seem like they'll go up or down for the time being. As you know, due to the current situation in the Middle East, there's significant pressure from stagflation. In other words, the economy is doing very poorly and the number of unemployed people keeps increasing, but at the same time, prices are rising steeply. Especially since oil and gas prices are going up, that's adding to the pressure of stagflation. So lowering interest rates at this stage is very difficult, and on top of that, raising rates from here is also extremely hard because it would have a very negative impact on the economy. That's why many forecasts suggest that interest rates will just remain at this level until the end of the year. I think it would be good to keep that in mind as well. Next, as for the rental market, there haven't been any major changes. So, looking at the entire Metro Vancouver area, thank you. Compared to the same month last year, it has continued to stay about 9% lower. Downtown is currently down 12.2% compared to the same month last year. Metrotown or Brentwood and Burnaby are down 10%, and Surrey Central is showing about minus 10%. When we looked at the data last month, the figures I reported to you were a decrease of minus 13.8%, followed by a drop of minus 10%, and finally a reduction of minus 12%. Looking at these numbers together, it is quite clear that there really isn't much of a significant difference between them at all. So for several months now, it has continued to stay down by about 10% to 12 or 13%. In particular, last month, the downtown area, specifically the Surrey city center area, saw a significant drop. But this month and last month, the drop has been relatively larger in the downtown area. As a result, it continues to be a tenant-favored market. For more details about one-bedroom rental prices, it would be good to check the graph. With that, I have covered all the reports I prepared for today. Lastly, just as we are enjoying this warm early summer weather, I hope that warm sunshine will soon shine on the greater Vancouver real estate market as well, so that the market can start moving again. With that, I will conclude today's presentation. Thank you for watching until the end today. I'll see you in the next video. Thank you.